Microsoft's price target is $600, making it the largest company in the world, according to a Wall Street analyst. Does this price hold water? I've done a full DCF valuation to find out. Let's discuss that valuation model in this video. I'll tell you my base price target for Microsoft stock in the next 12 months. Will it be $300 or $1,000? My conservative and bold price targets for Microsoft will be on my Patreon. Buckle your seatbelts and let's find out. Microsoft stock is currently at $374, market cap $2.8 trillion, second largest company in the world, trading close to their all-time high. Microsoft is a huge conglomerate. I'll skip their history. If you don't know who Microsoft is, then I'll hold my cat. She does not like that. I love her though. I will discuss two items in this video before my valuation model: gaming and AI. Let's start with gaming. Microsoft's ZeniMax Bethesda acquisition was a significant move in the gaming industry, with the tech giant spending a whopping $7.5 billion to acquire ZeniMax and its game publisher Bethesda Softworks. Microsoft gained access to popular franchises like The Elder Scrolls, Fallout, and Doom. You know what this means? Microsoft owns Doom. Sorry, the 90s kid in me just got out and jumped out with joy. Wait, did I just age myself? Microsoft one-upped themselves with the $69 billion acquisition of Activision Blizzard. Is one of the biggest deals in gaming history, and that is a huge amount of money. The deal has faced scrutiny from antitrust regulators worldwide, but it finally closed in October 2023. Despite the FTC's appeal to block the deal, Microsoft and Activision have joined forces to create a gaming powerhouse. The acquisition brings together two industry giants, with Microsoft gaining access to popular franchises like Call of Duty, World of Warcraft, and Candy Crush. This move is expected to boost Microsoft's gaming market share and help it compete with rivals like Sony and Nintendo. Microsoft is buying these companies to pump these numbers up. Xbox console sales have been lackluster since the 360. The money is now in online and M&A and cloud. Microsoft is at the forefront of the cloud gaming revolution with its xCloud service. As the gaming industry shifts toward streaming and on-demand gaming experiences, Microsoft's investment in this technology could give it a significant edge over its competitors. By the way, that sound is my cat eating. I know, you've seen her pictures. She's really cute. According to Microsoft, 20 million people have used the Xbox Cloud Gaming to stream games through the cloud. It's not too shabby considering it's only available through the Xbox Game Pass Ultimate subscription, which is $15 a month. It's an impressive feat for a relatively new technology. I'm sure it'll continue to grow in the future. Maybe one day we'll all be playing games on the cloud without ever having to download them. Wouldn't that be something? We gotta be a little careful though. Warning, there be dragons. Google already tried and failed in cloud gaming. The difference, however, between Microsoft and Google is that Microsoft makes their own games. Google relied on others. Platform holders need exclusive content to succeed. It is a requirement. I mean, can you imagine if Netflix didn't create their own content? Can you imagine Nintendo releasing a console without any Nintendo games? It would flop harder than the Virtual Boy. If you don't know what that is, now you know why. Can you believe that the Virtual Boy had no real cat was walking on the keyboard. Can you believe that the Virtual Boy had no real Mario platforming game? It had no marquee title at all. I mean, what were they thinking? Switching to AI. Microsoft has been making significant strides in the AI space. With its Azure cloud platform, AI-powered tools like GitHub Copilot that, helps developers, and the recent investment in OpenAI, which you may have heard of. This ecosystem of AI-focused products and services positions Microsoft as a major player in the AI industry. Microsoft's strategic partnerships and investments in the AI space, such as its collaboration with OpenAI, ChatGPT, further strengthens its position in the industry. These partnerships provide Microsoft with access to cutting-edge AI technologies and talents, allowing the company to stay ahead of the curve in the rapidly evolving AI landscape. On top of that, OpenAI uses Azure servers. ChatGPT has the consumer mindshare in LLMs. They're currently ahead of Google in the mindshare department, and really any other LLM system, including, Grok. It's nearly becoming a verb. Much like Google did with search, ChatGPT is poised to do with language generation. It's not just LLMs. You have DALL-E for image creation and many other technologies in the Gen AI space. Microsoft's AI investments have the potential to drive significant growth in the coming years. The company's Azure AI platform is already seeing strong adoption, and the recent launch of GitHub Copilot has garnered over 1 million users in just a few months. That's 1 million programmers using it, and it's a paid service. This rapid adoption demonstrates the potential for Microsoft to capitalize on the growing demand for AI-powered tools and services. Microsoft Azure, the company's cloud computing platform, has emerged as a major player in the rapidly growing cloud services market. With a robust infrastructure and a comprehensive suite of services, Azure is well positioned to capitalize on the increasing demand for cloud solutions across industries. The ongoing shift to cloud-based computing represents a significant growth opportunity for Microsoft. Microsoft Azure, well, it's a strong number 2 in the cloud market. And actually, it's kind of creeping up on AWS. It is growing faster than AWS itself is growing. Now, growth has declined, but remains nearly 30%. AWS, mind you, is growing at about 11 or 12% clip. AI should boost this in 2024, however, because businesses have pulled back spend due to economic uncertainties. Xiao Mao, how did you sneak in? She says to like and subscribe. And yes, that was her that you heard eating. She's too cute. There are much more to talk about with Microsoft, but let's just get to the valuation. I mean, that's what you're here for, right? Let me turn off the camera. Numbers time. In the past 12 months alone, Microsoft has returned $34.5 billion to shareholders through dividends and share repurchases. Microsoft is a cash printing machine. Q1 2024 highlights. Microsoft reported a total revenue of $56.5 billion, representing a 13% year-over-year growth. The company's net income was $22.3 billion, a 27% year-over-year increase. Note the margins. The margins are huge. They're huge. Yeah, that's what she said. Bad jokes aside, here's Microsoft's last 5 years' numbers. Revenue growth has been quite nice. This isn't the whole picture, though. We need to dig deeper. Lisa Su, AMD CEO, expects AI CAGR to grow from $45 billion today to $400 billion in 2027. That is a 70% CAGR. That's big growth, really fast. Microsoft has 3 business segments. Let's start with Intelligent Cloud. That's the most interesting to me. This segment includes things like Azure and GitHub. AI is estimated to contribute 2% growth to Azure next quarter. In their latest earnings call, Microsoft reported that customers using AI services on Azure grew 10x. 10x, as in times. That's big. In a recent report from Microsoft, Azure generated a revenue of about $75.3 billion in 2022. Napkin math, that's $18.8 billion a quarter in Azure revenues. That's $376 million a quarter right now from AI on Azure alone. And AI is just getting started. Azure AI alone is on a $900 million run rate, with customers growing 10x. At this rate, Azure's AI products could achieve a multi-billion-dollar run rate by the end of this year. That's like finding a pot of gold at the end of the rainbow. NVIDIA isn't the only one benefiting from AI. In my base case, I am projecting growth of 25% next year due to the AI phenomenon taking place over the world, trending down to 10% in 2032. More personal computing consists of Windows, gaming, and others. I project the Activision purchase to bump revenue growth 20% next year, trending down to 5% growth in 2032. Now for productivity and business, the boring stuff. Office, LinkedIn, Dynamics being the big items here. I'm projecting growth of 13% next year, trending down to 6% in 2032. To begin, let's understand the concept of DCF valuation. DCF is a financial model that estimates the intrinsic value of a company by discounting its future cash flows to the present value. DCF is a critical tool for investors as it helps them make informed decisions on whether a stock is overvalued or undervalued. The present value of expected future cash flows is arrived at by using a projected discount rate. The WACC is commonly used to calculate this discount rate. Now for the whack-a-mole chart, the infamous whack-a-mole chart. I'm issuing Microsoft a decent discount rate of 8.26% due to a combination of today's high interest rates and their extremely low volatility. Note that their volatility is actually lower than the S&P. Please note that the higher the discount rate, the lower the valuation. I'll just include charts for my base case. My expectations are pretty modest, honestly. Revenue is growing 17% next year, trending down to 8% in 2032. EBITDA margin remains high because, well, Microsoft is excellently executed company. Tax rate of 13.3%. D&A and CapEx remain flat as a percentage of sales. Perpetual growth of 3%. This gives us an implied stock price of $406.14. Please note, though, that if AI grows faster than I expect, and that is definitely possible given all the indications that I have seen, this number could go up. And if it does, I'll let you know. Here's the multiple valuation. The multiple is 18 because of the high margins that Microsoft has. It is down from the current multiple of 25. This gives us an implied multiple valuation of $470.58. I project in my base case Microsoft to be worth $5.7 trillion in 2032. Now what I do is I average the perpetual and multiple valuations to come up with the implied share price. And here's the base case. The implied share price is $430.36 for a 17.09% gain. My base case doesn't quite reach the lofty $600 target by that analyst. Does my bull case? For that, you'll have to head on over to my Patreon to find out. It's only $1 in my December promotion. The link is in the pinned comment. In conclusion, Microsoft investment thesis is a compelling topic to explore. Their strong position in AI, gaming, cloud, and their forward-looking strategies make them an exciting investment option. However, like any investment, it comes with its fair share of risks. It's essential to conduct thorough research and consider your investment goals and risk tolerance. Thank you for joining us in this discussion. If you found this video informative, please give it a big giant thumbs up and subscribe to our channel for more exciting tech and investment content. Remember to do your own due diligence before making any investment decisions. We'll see you in the next video.